Well, I think what is important to keep in mind is what is the intrinsic value of a company. I think it's always important to have a contrarian approach. Don't follow the crowd. You have to see value sometimes where people don't see it, and that's how you deliver good returns. And very often investors, whoever they are too focused on top-line growth. I prefer earnings growth, and earnings growth is linked to the profitability of a company, and that's what we try to identify. We don't usually have to hedge our currencies too much. You know, we are long only. We have a natural exposure. We don't really need to hedge, unless there is something exceptional. We can short. The problem with shorting is it takes a lot of energy. It takes more energy than being long. But so far our track record on shorts has been good, actually. The lessons learned from the crisis, I mean, there are plenty of lessons, but talking to companies is not enough. Whether you're going down or up. In 2007 and 2008, companies didn't see it coming. And in 2009, on the way up, they didn't see it coming as well. So very particular circumstances, like this crisis, you need to do a bit of a macro analysis. We haven't changed the concentration of the portfolios, but we have added a layer of macro analysis. Yes. We have our own research, and we talk to many strategists. I mean, a deflationary environment is not going to help everybody. But even in a relatively deflationary environment, some companies can thrive, and you have to identify them. But a lot of people are obsessed by inflation, and it is far from obvious. We are having an inflation at the moment. I think all the evidence point to deflation. And so you need to invest in companies that can genuinely generate growth. Well, I believe some companies or types of companies will tend to thrive in a deflation, and vice versa. We tend to be careful with companies who have lots of assets. We tend to like companies who are asset light, who have a lot of pricing power. We like low-cost solutions, and we like companies exposed to the consumer. These days, we are still, we've been very light on Southern Europe since 2008. We haven't changed this, but today I'm in Madrid, you know. I'm watching the situation, and I think there will be some opportunities in Spain and other countries like that in the not too distant future. Inditex is the perfect example of a company that would thrive in a deflationary environment. Everybody was afraid of the Spanish consumer last year, and it didn't prevent Inditex from showing very good results, from beating everybody's expectations. It's thanks to the strength of this business model, the quality of its management, as we discussed previously. They have a very good value for money proposition, and that is what matters. We have one or two other Spanish companies, but they are very small positions, and we intend to add up on these names. Greece is slightly more of an unknown, because Greece is very close to default, and so there is really a risk there that is more difficult to price. Well, I know that some people love gold. I think gold is the reflection of the lack of confidence by some in floating currencies. If floating currencies don't lose much of their value, gold is massively overvalued. The private sector has already adjusted. Loan volumes are extremely low, because the construction of new homes is extremely low, and so on and so forth. It's much better now than it was 2 years ago. And I think the stock market is already taking into account a lot of bad news. So there are some opportunities. I have a lot of people spending a lot of time and energy in emerging markets, but this will be unprofitable. While others have a safe defensive business in no growth Western Europe, but it will remain very profitable. I prefer a company that is increasing slowly its profitability in Western Europe than a company that is taking plenty of risks and actually for no returns at the end in India or China.